I'm Larry Shover from the CME Group in Chicago with September 18th bond commentary. Well, U.S. 10-year futures are edging lower. The yield curve steepening across the curve, seeing the 10-year futures actually yielding up 5 basis points at 3.04%. If we do close here, this will be surpassing levels that we saw in August 1st and almost matching the 306 level that we saw in the close on May 21st, 22nd. Right now we're seeing yields, like I said, up about 5 basis points on the day. That puts yields up about 9.69 on a 5-day basis and up almost 18 basis points in the last month. Firm bond yields and some comfort with the Italian budget situation, definitely giving a relief rally to yields, thus the reason futures are falling down. Also, we have overnight cash trading very heavily, about 203% of the 10-day moving average. 10 years took about 30% of that total volume. Consensus right now is saying why. You think last week with the lack of inflation data, CPI core, etc., no one seems to understand why yields are going up like they are and the futures going down as they are today. Some people might think that perhaps the Chinese tariff news, the economic impact isn't as great as some people have thought. Perhaps a rotation out of bonds into stocks, proving a real headwind for the futures prices. Also, the window closing for pension, and lastly but not least, corporate issuance. Some people do believe that perhaps this is just a bearish technical running its course and just a matter of time, because the long end of the curve, according to consensus, isn't seeing the inflation and growth data necessary for yields to continue to climb higher. I'm Larry Shover from the CME Group in Chicago with September 18th bond commentary.